Hello, welcome to the Commodity News on macro point of view. The episode that we'll have today will focus on gold and crude oil and natural gas, as it's probably most common traded futures of commodities. So let's do not wait and take a look what happens on the market and what we can expect here in the middle of the week from the gold, natural gas and crude oil. On natural gas, we had a bounce off a week ago from $3, and now the price is going down up to SMA 55. But yet, let's take a look closer because we've got, of course, healthy storage in the United States for natural gas, which is over 10% above 5 years average. Yet, we've got week after week recorded record of electrical demand in Texas because it's high temperatures over there, and they're expecting also this week very bad temperatures. As well, the natural gas should rise at the end of the week due to the fact that there is lower wind energy production, which will forced to use more gas. Of course, it won't be visible on storage levels this week because we still expecting to not have taken out gas from the storages. So basically, next week we'll probably see some new zero changes in gas storage in the United States. Yet there is a lower needed from Europe, as European Union has almost 90% gas storage fulls, and demand from Asia is also as not as high as it should be. As well, those weeks China main data for the unemployment and industrial production and everything else, it's worse than expected, which will affect as well gold and crude oil, not only natural gas, because it will lower all demands from global markets. And as I said, we might expect some rising prices this week for natural gas, but before that, it's a chance that today will drop a little bit more to see some SMA 55 level area. So it's 2.6, 2.55, 57, and then we should rise above to 280. But this is the natural gas, and it's mostly focused on the demand in the United States. For gold, I had here, they didn't work the way I was expecting, but because all the market is expecting that today's report from Federal Reserve will be very hawkish, and that should be, even that the Fed said that it was probably the last rising rates, those end of rising rates in the United States. And I set it up here, the level between 1900 and this Fibonacci retracement level $1,895 as a support level, and probably this support level will work until today's Fed document released at middle of the day from United States time. So here there is nothing much we can say. If there will be very bearish for the US dollar, that Federal Reserve is okay with the current balance between the rates and CPI and PCE in the United States, because the current balance is that rates are higher than the last CPI, than the last PCE data. So it should be, as most market expecting, the last rising rates is already behind us. So there won't be another raise in this year, and we'll probably have some descent from rates next year. If those reports will be very calmful that they are watching, but they are quite sure they won't be bouncing on a CPI or PCE data, so the gold should be bounce from those 1900 and start rising up to 1950 for the next couple of days. But if they're gonna say that current level, the last readouts of CPI and PCE are not satisfactional to Federal Reserve, and they might consider one more rise of rates in United States, in maybe not in September, but maybe in October, November, or December, whatever, this is gonna be costing gold to drop under 1900, and 1900 will be the resist for gold, not support like now, like in this moment, but as a resistance. So today's Federal Reserve documents released afternoon will be a crucial thing for the future of gold for the next couple of days, probably till end of the month. And oil, and as you can see, I had some first idea here, but it was also expanded up to almost exactly to my point. So I think $84 for oil somewhere here. It's a very local support, and it should serve as a bouncing area for the crude oil Brent that we have here on the screen. Why is that? Because Saudi Arabia extend their cuts. The International Energy Agency claimed that there is not so major cuts in Russian supply, but let's focus. Russia said they will hold some export, not production, but export. So they keep those oil in their storage. They might push it into the market without a problem, of course, into the Asian and African market, and maybe South America. But yet, it's still there. The Saudi Arabia is cutting production, so they don't have those oil. That's why it's keep rising. We have also Algeria, who cut some production. We've got a lot of bullish ideas. But the recent descent of crude oil Brent is because the China. As I said, the macro data is disappointing. It was lower than expectations, so it's a very big problem because it might affect as well the copper market. It might affect some others. It shouldn't affect the food market, as people need to eat whatever the situation in the world is. Yet there might be this problem, as China has food issues because both drought and some floods. Whatever area, in some areas you've got floods, in some areas you've got drought. So there's a big problem, and they will probably drop some wheat production, which will force them to import more wheat. But for the oil market, the current macroeconomical situation in China is very disappointing, and it's probably forcing the top usage of oil peak to be much closer than 2027, 2028 that is currently forecasted. Because if the China won't recover soon, and I mean really in next 2 months, maybe 3 months, there will be huge problem for the next year. because we are already waiting 8 months for China to recover after COVID blockades they had till December 22. And those oil prices were rising mostly because we are hoping that China will start recovering faster. They are not. That's why I think there is, at the moment, the balance should be somewhere around. Yet, the expectations, the forecast for the oil prices for the end of the year are a bit higher. They are closer to 85 to 85, between 85 and $90 per barrel. But as you can see, we still have something to return. So I'm not sure that Saudi Arabia will extend for another month the lower production, as their budget might be in a big trouble if they do that. But there might be some changes. We've got some climatic meetings in the Persian Gulf, so there might be something, they might be showing some will, and they will say we reduce the oil usage by dropping the production. This might be, a symbolical bargain card, but yet it would look good for the news. But I don't think they will drop a bit more, but not so much more for this week. And I think they will bounce. Maybe not today, maybe not tomorrow, but Friday or Monday they should bounce from those areas somewhere around $84 per barrel and start rising to $85, $86 for the next week. Thank you very much for your attention. Don't forget to subscribe. Please leave a comment, leave a thumbs up, share it with your friends, and see you on the next episode of Macro POV Commodity News.